Good morning, everyone. It is Tuesday, June 15th. This is Nadex Morning Analysis, where we take a look at hotspots in the markets today, where you might want to look for potential opportunity or where there may be some volatility. Before we get into it today, actually, quickly, my name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. Before we jump into some potential hotspots, this morning, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what do we have going on in the markets that we want to take a look at this morning? Now, it's Tuesday, so we are going to be doing a full-blown hour-long webinar in 3 hours, so a little bit after the open. In fact, I'm going to go ahead. If you're not registered for it, you can go ahead. I just dropped it into the chat. You can join that when there's a full hour where everything is covered. But let's talk about what we're seeing here for the open. So what are we going to see in the next couple of hours? And there are obviously everyone's waiting to see what's going to transpire with the Fed. The Fed meeting, the FOMC meeting kicking off today. Tomorrow, we're going to get more about it, but they are kicking that meeting off today. But how are we going into that? One, the Nasdaq and the S&P trading near all-time highs. So that's actually rather interesting. We've got oil trading at highs above $71 a barrel. We haven't seen that in a couple of years. We are going to do some technical analysis on oil this morning because it is moving. There's some volatility in the oil markets where we're seeing demand outstrip supply. We're also seeing a bit of U.S. dollar strength. We're seeing dollar strength. I mean, there's a lot of things going on right now. Retail sales numbers just came out. They are down. People are like, well, wow, retail sales numbers are down, but we're still seeing inflation. So there's this balance. I mean, yes, there is definitely inflation. We can see it right here on this oil chart. That's inflation. So there is going to be some balance going on. We're not quite sure how the Fed is going to digest all of this. I think against the retail sales, we do need to counterbalance that with, okay, retail sales are down, but California just opened, I want to say yesterday or today. California they produce 15% of the U.S. GDP. California opens up full time. We're going to see some spending. So even though retail sales may have dipped a little bit this past month, I counterbalance that with knowing that a huge population of folks are going to be out spending over the course of the next month. So there's a lot of moving pieces. Brian, I'm going to go ahead and flip it over to you. And I know we're going to take a look at oil, and maybe we'll take a look at a couple of other things, and then we'll save some of it for this session in 3 hours.
Okay, sure. Yeah. So, I mean, the biggest numbers, and we talked about it yesterday, today's kind of is it's all the ingredients for the cake for tomorrow. Retail sales, and again, I'm not surprised at all if you guys listened to whether the first broadcast or the second broadcast I did yesterday. I talked about how there being a split number, and by split, we expected one red, one green. Not surprised whatsoever. The PPI number, again, that is the final price after producers make it and sell it to us. Haven't seen it yet. And again, I could bring up the transient definition by Webster's. Going from 0.6 to 0.5, yeah, I wouldn't call that transient because it's still adding, right? Transient means that it should go backwards a bit, not just lower. This went higher and by a substantial amount, right? 0.5 to 0.8. And again, is it as big of a deal that retail sales is lower if they're getting more money from the actual sales? And the answer is no, not really. But it has to go back to, again, the Fed has to acknowledge it tomorrow. They got to talk about it. And it's not like this is a surprise. I'm not the only one that has believed this. If you don't trust me, go and look at what charts look like for the dollar index. Here is the dollar index in the overnight. Here's that UK Open. Yesterday, again, this was a channel we talked about the dollar index slowly going back down again because we wanted to find an area to get long. We wanted to get over to here. I wanted the channel down. It ended up taking a little bit of a hop, but then again in the overnight completely collapsed. Here's the UK Open. What did the UK Open believe? Again, that it's going to be a stronger dollar and launched it higher. Okay. So again, everybody out there kind of expected this. The Fed is the only one that did not expect it, I guess, and we'll see how that kind of rolls over into charts. When we talk about kind of inflation, you see this type of movement in the dollar. First thing you got to think about is, well, wait a second. I know there's gold out there. Gold is relatively flat. It's at zero. And again, it's because the Fed has not acknowledged it yet. But where do we see the most inflation? Over here, over in the oil market. And again, here is the UK Open right here with the blue box. Again, yesterday was another one of those little big scenarios that we talked about. Well, today is already a big bit of movement. And the question is it going to be one of these big days, right? Where we have, not the little bigs, but is this a big day? And again, yesterday morning we were sitting right at this level, and I mentioned this is one of those higher time frame zones. I wanted to see it go higher. We got a little of a pullback, and next thing you know, it came down and started basing. It's like, that's it. That's a sell, and it dropped lower. Now we're kind of in that same level. So it's interesting. Again, the retail sales number doesn't necessarily help oil. Remember, oil inventory report is tomorrow. Big question is how many people are going to be trading oil with FOMC. I mentioned of interest rates tomorrow. So I think it's an interesting case, and like I said, this is a larger time frame level. I think we had this back, and we actually uncovered this one on the daily. It's been a long time since oil's been up in this range, and with such a big bit of movement up, again, typically when we see this in the European sector or the European session, there's going to be some profit taking. There was from 4 o'clock until about 8 o'clock, there was not even a pullback. It just went straight up, and it was a move of, where is it here? $1.04 for what? Wasn't really any news that would necessarily drive this higher. So again, all it did was it drove it back up into a higher time frame selling area. And again, we're starting to see it retrace just like we did yesterday. Yep. Now, it did put a new high in. So I will say, not all-time high, but I'm saying that we had one high here, a higher high, and then a higher high on these swings. So that's important to note. But I think profit taking is something that we definitely have to keep on the radar for today.
Yep. Real quickly, just in oil, how do you want to play this? I just took a quick peek. I mean, if you wanted to take a short position oil, looking for this rollover to continue a little bit, one way would be through call spreads. I mean, there's a call spread out there where, again, limited risk, defined risk, defined reward. If you're looking for it to roll over a little bit, you could potentially sell a call spread. The other way would be just over in the binary options. Let's just bring up oil in the binary options. And there is definitely some opportunity in here. So I guess it all depends on how you want to play it, but there is a call spread in there that might be kind of interesting, where in the event that you're wrong and if oil were to go higher, your risk is limited. So, all right, I'm going to flip that back over to you, Brian.
Yeah, and if you jump across the IG, the client sentiment, you can see that we've actually now shifted to people are more net short. People were long this forever, and you could see definitely long. Now it's just shifted. So it's interesting to see that we had a lot of movement, grinding, and now all of a sudden we're seeing that shift. It's gone from just a little bit more long to a little bit more short. It's still in the area where it kind of matters. Remember, when we get above that 75 is really where it starts to cause issues. But it is interesting that the kind of sentiment has changed on oil there. Next thing you wanted to cover, which one was it? I'm sorry.
I guess we've seen a little bit of dollar strength. So I thought maybe a currency pair. We could take a look at the euro US dollar. Yeah. Maybe we could take a look at an equity index. I mean, the S&P.
Yeah. Well, that's going to matter today too. So I would say that this is one of the big ones. I'll make sure we get out of here at 9 today. But this is obviously a lot of movement in the dollar. And again, how much of this was knowing what the news was going to be, driving it forward? And now that it's got that great number, could we potentially have a retracement? Sure. I would say, and again, we're not trading the dollar index in general, but I would say these are two levels. And yesterday during my session with my group, I said, hey, if we can get to the UK Open and be at this 2150 or 2187, I like both shorts. We didn't get as close, and unfortunately, this is what happens. Sometimes we run out of steam in the middle of the night, and we have to look of, is it in an area that was close? Did it do it? Yes, it did the exact trade. It didn't get as high as we wanted, and again, that's why sometimes you need to be up in the middle of the night to be able to trade these. Now, again, just because we saw the dollar strength, we saw this come down, there is a little bit of a level, and this is kind of one of those, this is a little bit of a finesse trade, okay? Here's where we kind of based last week late in the afternoon, right when the UK session ended. Here is where we ended for the end of the week, last week. We opened at the very, very bottom, pulled up, and then touched it, touched it, touched it. So it's a level that's not fresh. It's showing us that there are buyers in there. And again, I put some of these out there, but you can see that there are multiple opportunities in here, depending if we use that level or the other one. This area has been beat up quite a lot. So when I'm looking to the left, I'm not seeing really a whole lot of buyers until we get down to the 120.48. This is kind of one of those Harry Potters where we pull down, get a confirmation. Now, it is going with the trend today to the downside. It has had to move a lot. It's moved from, I mean, we're about 50 pips already into it today. So we don't really, to get another 50 pips out of it is going to require some type of, I don't know, not necessarily a huge comment, but anything minor that, I don't know. There's a lot of different minor comments that will continue this driving. But I think, again, set on your radar, if we break below 120.91, this is the 1 to 3, which brings us down to approximately, oops, I should change that. I don't want people to get confused with that one. We'll change it here. There we go. 120.69, get about a 30 pip runner to the downside. But overall, I mean, we're pretty much clear all the way down to this level, which brings it up to a 1 to a 5.5 risk to reward ratio based trade. So it's a decent level. It's about a 40 pip mover total. A couple different ways to play it. Again, the biggest thing you want to worry about is when do we break through? And again, it could be at 10 o'clock. It could be once the U.S. Open comes through. But we're looking for some type of a pullback to give us that established level of risk. And again, because this is a continuation with the trend, it is not a candidate for a knockout today. It would be more of a call spread or a binary.
Yeah. I'm just taking a look at the binary options. And by the way, we do have this level where we are right now, right around one spot 21, where buyers have come in the past. What Brian's looking for, the dollar. We've seen some dollar weakness, a little bit of profit taking, dollar weakness coming right back into play. If we push through this level, is there room to the downside? Absolutely. So something to be looking at, keeping an eye on. The euro. Yeah, you know what? The euro US dollar. We've actually got a request in. If we're going to talk about the US dollar, do you mind just bringing up US dollar CAD real quickly and just taking a peek?
Sure. Yeah, I can do dollar CAD. Yeah, dollar CAD.
We get requests. Yeah. We'll take a look.
Yeah. Dollar CAD is a similar scenario. We're looking for a break below 121.31. You can see that this one also, and again, follow the time. Let me move this across. This was a trade we had set yesterday. You can see that this is also in the European Open, right? There was the Europeans. They sent this thing straight up through the roof, and now we're approaching a level on the top side. This is also an extreme level. You guys can see here. This is what the last time the price was up here, we had a huge push up, a one candle base, and then a drop back to the downside. So it's also the same scenario where we've had a lot of dollar strength. You're going to have profit taking. And again, because this is a reversal, this does fall into the realm. Again, reversal, think knockout. Continuation, think call spread. Tends to be what it is. But again, you could use a binary here as well as you want. I don't actually have my call spreads up there to know if there's one there or not. But again, same scenario. Basically, it is a profit-taking opportunity inside of the dollar. But again, I would assume that the retail trader is probably going to get involved in this one. Like I said, that PPI number was pretty spectacular. But again, it's all about having limited risk to reward when you're setting your trades up.
All right. Excellent. All right. So I'm thinking, do we have time? Do you want to do a quick peek at an equity?
Sure.
And then we'll, just to tease it up, and then we'll, I don't know, whether it's the S&P or whether it's the Nasdaq.
There's two. I mean, the S&P 500 and the Dow are pretty much the same setup, same scenario right now. Well, with the open coming up on a 15-minute is typically how we look at these. You can see that we are in an area of buyers, and I can kind of shrink this just a little bit to kind of just, further kind of reduce the risk. We're in an area right now. Typically, when you see this, we're looking for long opportunities. Why? Because it's pulling back into an area of buyers. But this is a lot of candles straight up in the air yesterday afternoon with no pullbacks. Again, that's a racetrack. This is for so it's an opportunity to kind of take over this. And again, you always need to have some type of limited risk. Here's a level, and again, without this racetrack, you should be looking to go long. But with the news and everything else, if we get basing here right at the open, I'd look for this to come down today and end up at 42.25-ish. YM is the exact same type of setup. Where we've hit an area, We had basing. We have a racetrack. It's touch it once. It touched it twice. And again, with the lack of this, we would look to go long at the open. Although we're seeing some, trending to the downside, I would say a break of this one of the 34 240-ish area. We have opportunities to get down here to the 34 115 for later today. And again, we can cover it at noon.
Yeah, and we are going to do that. So, first let me read this, and then we'll do a quick little recap. One, if you got any questions for Nadex, please email us, customerservice@nadex.com. We're here to help. Brian is also around. You can catch Brian, email him, support@keeptradingsimple.com. He is definitely accessible. Now, let's do a quick little rundown of where we are. Again, S&P and Nasdaq near all-time highs. Retail sales came in lower than expected, but balance that with California opening up. Traders could be balancing that out. We are definitely seeing inflation. We see oil trading at highs we haven't seen in 2 years. And we'll have to wait and see how the Fed, how they position this. And I tend to agree with Brian, is there's going to have to be the Fed's credibility. If they can't just ignore it, they're going to have to, there's a big elephant in the room, and they're going to have to say something about it. Now, whether they're going to say, whether we expect them to say we're going to move up, or whether when they're going to start tapering their purchases, they might still have the same time horizon, but at least acknowledge that there's something going on and not just discount it out of hand. So we'll see how that goes. And we'll be doing a full-blown session in 3 hours. So come back in 3 hours. I dropped the link in the chat, and all the markets will get covered, but it'll be after the U.S. Open. We'll see how people are reacting to it, and it'll give you an opportunity here how to set up potentially for tomorrow. And then Brian and I will be back tomorrow morning, and tomorrow is going to be a big day in the markets when the Fed starts talking. With that, Brian, you got any parting things or?
No, that's it. Just come back at 12, and we'll cover the rest of the setups for tomorrow morning.
Excellent. All right. Well, we'll catch you again in 3 hours, and then again tomorrow morning. With that, good luck in the markets, everyone. We'll catch you in a bit. Thanks.